Hey CMA buddies, let's today start with the third part of 10.5, and today we will be talking about what is called as an operational control. We'll start with operational control and we'll finish off this chapter with what all remaining topics are there, right? So what do you mean by operational control? Operational control provides post-action evaluation. That means after the action has taken or the task has been completed, you basically evaluate. That is called as an operational control. And it has control over a shorter periods of time. This basically involves systematic evaluation of performance against predetermined objectives. So initially you would have some kind of predetermined objectives. So you basically evaluate how the performance has been with respect to the predetermined objectives. So that's what operational control talks about. Right? So basically it's a post-action evaluation. That's the first point, and it has control over the shorter periods, and it involves systematic evaluation of performance against the predetermined objectives. So that's what operational control all about. Now, to ensure operational control systems, an organization must follow 4 steps. So there are 4 steps when we talk about operational controls. So what are they? First of all, you set up a standard. So setting up the standards is the first part. That is the steps involved in operational control. The second one is you measure the performance. The third one is what are the difficulties in the measurements of the performance. And finally, you take the corrective actions, right? So starting with the setting of standards, what does it talk about? It says that standards are the levels against which the actual performance will be measured. That's a that's a general definition. What do you mean by standards? Standards basically are the levels or they are the benchmarks against which the actual performance will be measured. Now classified into 2 categories. One is quantitative and the qualitative standards. So when I talk about standards, they are basically two types of standards. One is the quantitative standards and second is qualitative standards. Quantitative standards, as the name itself suggests, it is expressed in precise physical or monetary terms. So basically something which is in the form of numbers is called as a quantitative standards. Now this can be with respect to production, marketing, finance, etc. Now they may relate to 4 aspects. How I remember it is by saying it as or by memorizing it as CPRT. So what does the CPRT stands for? Cost standards, productivity standards, revenue standards, and time standards. Fine. So setting of standards basically is what? It is basically comparing the levels against which the actual performance will be measured. There are 2 types of standards. One is quantitative and the qualitative. When I talk about quantitative talks about something which is in physical or monetary terms with respect to what? Production, marketing, finance. That is the core or the operations. That's the very primary operations we are talking about. Because we are talking about operational control here, so we will talk about all the operational departments. So these are what? Production, marketing, finance, etc. And when I talk about quantitative standards, it may relate to 4 things. That is called a CPRT, that is cost standards, productivity standards, revenue standards, as well as the time standards. Now, when I move on and talk about the second standard, it is a qualitative standards. So it is what? Human factors such as high absenteeism and turnover rates. That means basically how frequently the employees are taking leave, or turnover rates means how frequently your existing employees are quitting and the new ones are joining. So that is the turnover rates. Or it can be poor production quality or low employee satisfaction. That can be causes for declining performance. So what are the various reasons because of which the performance may decline? First of all, it can be human factors such as high absenteeism and turnover rates. Production quality, if it is taking a hit, then it is a qualitative standard. Similarly, low employee satisfaction can be a cause for declining performance. Hence, qualitative standards needs to be established to measure performance. So that's how it is important as far as the setting of standards is concerned. So qualitative and quantitative, we have discussed both. Moving on to the second step of the operational control, it is the measurement of performance. So the second step in operational control is measurement of performance. Here the actual performance is measured against the standards fixed. So whatever standards you have laid down in the first point, that is quantitative and qualitative, you just see whether the actual performance is in line with it or not, right? It is important to understand how the measurement of performance actually takes place. Fine. Operationally, measuring is done through accounting, reporting, and communication systems. So the 3 ways of basically measuring your performance can be done through accounting. That's the first part. Secondly, through reporting, and thirdly, to communication systems. Various evaluation techniques are used for this purpose. So you use different evaluation techniques. So the points that you really need to remember is what exactly is measurement. Measurement is nothing but your standards is compared with the actual. How do you do that? It is basically done through accounting, reporting, and communication. So these 2 points, if you remember, that's more than sufficient, right? Moving on, what are the difficulties in the measurement? Now we spoke about measurement of performance, but there are certain difficulties that you may face while measuring the performance as such. So what are these difficulties? There are several activities for which it is difficult to set standards and measure performance. For example, it is not easy to measure the contribution of a manager or to assess a departmental performance. Fine. So there may be certain activities or certain tasks for which you may not be able to set any kind of standards and eventually not able to measure the performance. So what are these kind of tasks or standards, or these types of activities be? It can be contribution of a manager. You cannot quantify how much the manager is contributing, right? Because he's the one who's just going to supervise. So there's no quantitative mechanism for this. So this can be very difficult, or rather it is very difficult to measure the performance of the manager in such kind of, when we talk about the operational control. Or it can be also difficult to assess a specific departmental performance. Now the solution lies in developing verifiable objectives. So you should have a mechanism wherein you can verify the objectives stated in quantitative and qualitative terms against which performance can be measured. So you need to lay down certain kind of standards, or rather some kind of verifiable objectives which can be both in quantitative and qualitative terms for you to measure the performance, right? So what are different things that you can actually do? First is timing of measurement. Point at which measurement should take place. So timing of measurement is very, very important. So to overcome difficulties in standards, first thing you can do is you can time the measurement. Now this can be, you have to exactly tell at what time you should basically measure the performance. Delayed or before time measurement can defeat the purpose of measurement. So it should not be too early, or it should not be too delayed. So you have to make sure that the measurement is basically very much on time. Hence measurement should take place at critical points in a task schedule, that is either at the end of the definable activity or the conclusion of the task, right? So ideally it is better that you should rather measure the performance only at the end of the task or the conclusion of the task. Then second thing is periodicity in measurement. It focuses on how often to measure. So it's not just about when to measure, you have to also determine how often to measure. Now financial statements like budgets, balance sheets and profit and loss accounts are prepared every year. Being a finance student, you may be knowing that. But certain reports like production reports, sales report, etc. are to be done on daily, weekly or monthly basis. So whatever reports you are preparing, you should know in what periodicity you should be measuring it. So if it is a balance sheet or a P&L, that can be done at the end of the year. But other reports which have a short-term impact on the business, for example, the production reports or the sales reports, they should be done on a daily, weekly or a monthly basis. Moving on, you should identify the deviations, right? The purpose is to identify deviations between the actual performance and its comparison with the standards of performance. Deviation means just digressing from what is the standard. So if there is any deviation, how would you identify that? Now to identify between the actual performance and its standards, right? Now there can be three situations when I talk about the deviations. The first one is actual performance matches the standards. So whatever performance is there or has been attained, that is as per the standards that have been laid down, or it exceeds the standards, or the actual performance falls short of the standards. So let's understand all these points one by one. First of all, when I talk about first situation, that is actual performance matches the standards, it is ideal but it is not realistic. It is not every time that you will lay down a standard and that standard will be exactly achieved. A range of tolerance limits may be fixed within which the results may be accepted satisfactorily, and deviation from it are considered as a variance. For example, if I am supposed to sell say 100 units of a product in a given month, now a range can be between 95 to 105. If my targets are within this range, that is fine. So 100 can become 95, 100 if becomes 105, it's great. But if it falls below this threshold, say for example you have attained only 85, in that case they should be considered as a variance. So that's what it talks about. So basically your actual performance meeting the standards, well and good, nothing like that. But it's not realistic. That's not what happens in the usual business scenario. So what you should do is you should have a range. So within that range, if you meet the targets, that's absolutely fine. But if the targets fall way below your expectations, or it also becomes way higher than your expectations, say for example you have attained 120, so this can be a one-time phenomena. So in that case you have to have a tolerance range, and if there is a lot of discrepancy, then that should be considered as a variance. Second situation, it says that actual performance exceed the standards. So that means second situation is an indication of superior performance. If exceeding the standards is considered unusual, a check needs to be made to test the validity of test and the measurement systems. Now, as we spoke about this, if 100 becomes 120, right, then that's well and good. Nothing like that. Your business would be doing absolutely well. But you also need to make sure that if the numbers are indicating than what exactly the actual standards are, then in that case you need to make sure that there is a test of validity, and the measurement system should be measured again, as in maybe you're not setting the targets the way it should be, so that's the reason the targets are basically exceeding way beyond the actuals. Fine. Now, third situation should be taken seriously, that is your actual performance short of the standards, and strategists need to pinpoint the areas where performance is below standard and go into the causes of deviation. So if it is way below the expectation, then obviously you need to look into the analysis part, and strategies need to determine as to why the performance is going way below the standard, and you have to take the corrective actions for that. So analysis of variance leads to plan for corrective action. As I've already said, if there is a lot of variance, that means if it is exceeding too much or falling below the expectations way too much, in that case there is a need for corrective action. Fine. So this is what is difficulties in measurement we talk about. Now, difficulties in measurement can be categorized into three parts. One is timing of measurement, then you talk about periodicity in measurement and identifying deviations. When I talk about timing of the measurement, you should know exactly when to measure. So ideally that should be at the end of the task. If I'm talking about periodicity in measurement, then how often it should be measured. Please remember the various statements that are prepared. And when I talk about the identifying deviations, then I talk about the exceeding standards, below standards, or matching or exactly matching the standards, right? So these 3 points would cover the measurement part. Now look at the figure, you would be able to understand this easily. Analyzing of performance measurement challenges. Fine. So first of all, you can have measurement difficulties. This can be due to managerial contribution or departmental performance. Then you talk about the periodicity, that is annual financial reports or frequent operational reports. Then you also talk about the timing issues, which can be premature measurement or delayed measurement, and deviation analysis. So below standards or exceeding standards. If it is exactly the standards, then nothing need to be looked into as much. Finally, you come to the last point of the operational control or last step of the operational control and talks about the taking corrective action, which we have already discussed in the point number 3. The last and final step in the operational control process, initiated by the management. So who takes the initiative? The initiative is basically taken by the management. For what? For rectifying the shortfall in the performance. So ideally the corrective action should be taken more often than not in the cases wherein the expectations have not been met. If the performance is consistently low, strategists have to do an in-depth analysis to isolate the factors responsible for such performance and take corrective actions, right? So that is very much self-explanatory. So the last point in the operational control step is basically taking the corrective action, right? Who does that? It is basically done by the management. And if the performance is consistently low, then the analyst or the strategist have to do in-depth analysis to isolate the factors. That means they should distinguish the factors which is basically responsible for the low performance and how you are able to take the corrective actions, right? Moving on, there are 3 courses of corrective actions, right? First of all, you talk about checking the performance. So when I talk about corrective actions, they themselves involve 3 courses. So what are these? First of all, you talk about checking the performance. Now, performance may be adversely affected due to various factors such as inadequate resource allocation. That means the resources that are supposed to be allocated that are not done in the right way. Ineffective structures or systems. Your system is not very much in shape, so that needs to be rectified. There may be faulty programs, inefficient leadership styles, etc. Right? So corrective actions may include change in strategy, systems, structures, training programs, redesign of jobs, re-establishment of standards, budget, etc. So whatever are the problems, if you take the corrective actions with respect to it, obviously you would be able to improve your performance in a better way, right? Second, you talk about checking the standards. So first thing what you do is you check the performance, then you check the standards. Managers should always be able to revise the standards when the standards are set are unreasonably low or high. So that's what I said. I already mentioned when we spoke about those 3 points of deviations. Either your standard should be very much in line with the company's performance, right, or the expectations. It should not be very much high or low. Higher standards may lead to discontentment and frustration, whereas low standards may make employee unproductive. So your standards should be very much as per the company's expectation. If it is very much high, then that can lead to frustration within the employees. Generally, you would see that if the company lays down higher standards For example, you need to sell say 500 units and your capacity is only 200. That case, employees will be like, what are we doing? Why are we even sitting in this organization? These people are deciding so weird kind of targets. So that can be that can give you a sense of frustration and dissatisfaction. But if it is very low, then people will attain their targets and they will while away a lot of time. So that means you are not basically setting the standards and you are basically not using your resources optimally. Standards check may result in lowering of standards if it is observed that organizational capabilities do not match the performance requirement. It may also lead to raising of standards if conditions have improved to allow better performance, right? Then moving on, the last point, that is reforming strategies, plans and objectives. So first of all, you talk about checking the performance, then you say checking of standards, and the final point in the courses of corrective action is reforming strategies, plans and objectives. So you basically reform the strategies, plans and objectives. Strategic control generally needs to change in strategic direction, wherein strategists concentrate on the process of strategy formulation and choice. So the last resort or the last course of action or course of corrective action that can be taken is basically you reform your strategies, plans and objectives. How do you do that? There are various techniques such as TQM, that is Total Quality Management, and ISO 9000 standards series, which basically are an example of good control mechanism. So if you have a good control mechanism, you basically can reform the strategies, plans and the objectives. So that's what is all about operational control. We have discussed the 4 points. The final one is taking corrective actions. Please remember these 3 points when I talk about corrective actions. Either it is checking performance or it is checking standards, and finally basically you reform strategies, plans and objectives. Examples of TQM and ISO 9000 standards can be remembered as an example for the last point, right? So which corrective action should be taken to improve the performance? You check the performance, address issues like resource allocation and leadership styles to enhance overall performance. You check the standards, ensure standards are appropriately set to avoid employee discontentment or unproductivity, and finally you reform the strategies, focuses on strategic direction and control mechanisms to align with organization goals, right? Then we come to the next part of the chapter, and this part talks about something called as a task control. This is also the last part of the chapter. So what is task control all about? It is a process of ensuring that specific tasks are carried out effectively and efficiently. So if there is a task, how do you control it? It is basically a process wherein all the tasks are carried out effectively and efficiently. Primarily aims at controlling things and performance, and such control may be purely direct, right? So you talk about the control which is purely direct. Example can be placing order for purchase of goods if inventory falls below the threshold. So you have a certain threshold that needs to be maintained, or what you call as a benchmark, and once it goes below that, in that case you order it. Even JIT, if you remember, JIT, just in time, can be one of the examples of this. Now low task control makes employee more stressed as they lack control over how and when they perform their task, as well as lack of control over the pace of work activity. So the task control should be optimum, should not be very a low task control, because what it can do is it can make employees more stressed, because lack of control can basically can lead to confusion in the minds of the employees. They don't know where to perform their task, how to perform their task, and lack of control can also lead to a lack of control over the pace of work activity. Fine. Then you come to the most important part of the chapter, which is a part of the task control, and these are called as KRA'S, KPAs and KPIs, right? So let's start with the first one, that is KRA'S. KRA means key result areas, right? What do you mean by KRA? That is key result area. That is refer to a short list of overall goals that guide how an individual does their job, or general achievement and progress goals for an organization or one of its divisions, right? So what do you mean by key result areas? Try to understand this. It is a short list of overall goals. So overall goals, you create a short list of that, and that gives you guidance how basically an employee or an individual should do their job, or what can be their general achievement and progress and goals for an organization. Either it can be from an employee perspective, or even if you talk about a division. Fine. So it refers to a short list of overall goals that guide how an individual does their job, or general achievement and progress goals for an organization or one of its divisions, right? So till there you can remember as 1 point. This becomes your second point. So it refers to a short list of overall goals that guide how guide how an individual should do their job, or general achievement and progress goals for an organization or one of its divisions. KRAs define the scope of a job, department or organizational goals and define the optimum outcomes and results of daily work. So the idea of key result area is basically define the scope of a job or the department, or you can say even an individual. So when I say a job, it's obviously an individual or organizational goals, and define the optimum outcomes and results of daily work. Simply look at this diagram, you would be able to understand. If you just summarize this diagram, that will summarize the entire KRA. So first of all, you talk about the optimum outcomes. When I say KRA, it should be optimum outcomes. So it defines the best possible results. Then job or department or organizational goals, that sets the scope of the objectives, and individual goals and guides personal job performance. So this is what is KRA all about. Now, what are the various attributes important in the development of KRA? Let's understand these. If KRAs are developed for a position, they should first majorly define that job, that particular job should be defined. So that's the first and foremost criteria of a KRA, and give the employee clarity in their role and mission within the organization. So it basically defines the job of an individual, and it gives the employee the clarity on what kind of role they are supposed to perform and the mission within the organization. KRAs is likely to include a list of functions and activities vital to success. So KRA basically lays down a list of functions and the activities that are very important for an employee to perform, and which is also important from a success point of view. They may require certain objectives from an employee when the said employee has the ability within the organization structure to accomplish that objective. So you basically can ask the employee to himself give a certain objectives, so that the company can realize its true potential and that objective ultimately can be attained, right? Now KRAs for an employee, department or organization should be SMART. So please remember the SMART. The SMART is something which I have already covered in the previous topic also. SMART stands for specific, measurable, aligned, relevant and time bound, right? If you have not seen my videos before, please check it out. SMART has been beautifully defined with an example also. Now KRAs must be in writing, right? So it should be in writing, it should not be verbal. So it should be in black and white. Reviewed by all relevant parties, agreed upon and signed by the people involved. So first of all, it should be in writing, and it should be reviewed by all the relevant parties. So everyone concerned should be basically reviewing it. It should be agreed upon. So parties on both the sides should agree on it, and it should be signed by the people involved, especially when it involves employee's role, right? So that's what KRA all about, because it defines the role that an employee is supposed to perform. The details involved with respect to duties of employee should include metrics that can and will be measured to assess the employee's performance in the relevant areas, right? So what are the various attributes important in the development of KRA? First of all, you define the job. Employee should have a clarity of what is the role or the mission they are supposed to carry out, and that is very, very important from the success point of view. Then secondly, the employee should themselves be encouraged to give certain objectives, so that they are in line with the company's or the organization goals, and his ability to attain those objectives. Then you talk about the SMART part, and the SMART can be with respect to employee, department and organization. SMART stands for specific, measurable, aligned, relevant and time bound, and it should be in writing, reviewed by all relevant parties, agreed upon and signed by the people involved, right? And details involved, especially with respect to the duties of the employees. It should also lay down the metrics that can and will be measured to assess the employee's performance in the relevant areas, right? So these are the essential KRA attributes. You should have a role clarity. Role clarity talks about defined job roles and missions for employee understanding. Then you talk about objective alignment, that ensures employee objectives align with the organizational goals. Then you talk about SMART. You already know the SMART full form. You should emphasize on that. And there should be a formal agreement. That means it should be written, reviewed and signed agreements for clarity and accountability. Fine. Now, what are the problems in developing KRAs? First of all, there is a lack of clarity. Fine. Under KRAs, neither the individual nor the supervisor is clear about the primary task and results that the employee should focus on, task and result that can drive an organization structure. So the problem is there is a lack of clarity when I talk about KRAs. That's why you basically define the rules explicitly, right? So under KRAs, neither the individual nor the supervisor is clear about the primary task and results that the employee should focus on, task and results that can drive an organization structure. So both, as far as the role is concerned and the task and results are concerned, there's a lack of clarity. Then second thing is distractions. People are often distracted into doing daily tasks that may seem important, but that are of limited value to the success of the organization. Something which is very redundant. Redundant means you do the same thing again and again, or recurring in nature, but that may not be adding a lot of value to the success of the organization. And third one is top-down imposition of KRAs. Supervisor imposing KRAs on employees without discussion to get their input create a system that often fails. So if there is a lot of domination, or basically they are being dictated, in that case the KRAs can lead to a system that can literally fail. So the three things that you need to remember with respect to problems in developing KRAs are, first of all, there is a lack of clarity, then there may be distractions, and top-down imposition of KRAs. So these are the problem areas that you need to have a track of. First is lack of clarity, that is unclear task and results. Then it may lead to distractions, that is daily task of limited value, and there may be a top-down imposition, that is no discussion with the employees. Right? Moving on to the next part. Now we talk about something called as KPAs. Right? So task control had three things. One is KRAs, second one is KPAs. KPA is key performance areas. Now what do you mean by key performance areas? These describe broad areas of responsibility for which a department or organization or individual may be responsible. So when we spoke about the KRAs, that the result areas, we spoke about how to define a job. Now we talk about the performance areas, that is KPAs, and this basically describes broad areas of responsibilities for which department or organization or individual may be responsible. They are not tracked with results or result focused metrics. Example are improving safety and accident prevention, maintaining good working conditions in a plant, using resources efficiently and effectively, improving business processes, so on and so forth. So these are the various areas that comes under KPAs, right? So basically it defines the broad areas of responsibilities for which department or organization or individual may be responsible. It has nothing to do with result orientation. It is not even result focused. They basically are concerned with something like improving safety and accident prevention, working conditions, using resources, business processes, etc. So what are the important key performance areas? There are 4 KPAs that are important for any business to identify, understand and pay attention to. You can remember this as FCMR, right? This is very much common. You would have read that before also. Even if you have seen my earlier videos, this is something which is very repetitive. F stands for financials, C stands for customer satisfaction, M stands for market perception, and P stands for productivity. Self-explanatory, I'll just read through it, you would understand it automatically. F, that is financial. This basically includes revenue, cost, net profits and trends that affect all the other 3. That is these 3, the following 3, right? So when I talk about KPAs, there are 4 important areas. For what? For business to identify, understand and pay attention to. This FCMR stands for financial, customer satisfaction, market perception, and P stands, sorry, it is FCMP and not R. P stands for productivity, right? Now first one is financials. Financial, we all know, it basically includes revenue, cost, net profits and trends that affect all the other 3. So this becomes a key performance area. Second one is customer satisfaction. It deals with the customer complaints about the business or products, product return rate and the results of customer satisfaction surveys. Then you talk about the market perception, includes how customers and potential customers view the company or its product. And finally you talk about the productivity. This talks about accomplishing of organizational major goals, meeting day-to-day requirements to keep the company moving forward and keeping the customer satisfied, right? So these 4, just go through it once, you would be able to explain on your own, right? So key performance areas overview, if I talk about, it has to be financials, then you talk about customer satisfaction, market perception, and finally you talk about the productivity. Now we come to the last part of the task control, that is key performance indicator, right? That is KPI. So KPIs. So the metric that measures whether an organization is meeting certain objectives and goals that are set to help the organization succeed. So that's what is KPI. It basically involves something called as sales figures, product performance, return on certain organizational investment, etc. KPIs often are the measurements with the general goals outlined in K result areas. So basically, how do you measure KPI? KPI basically are the measurements with respect to what? With respect to the KRAs, right? So if you just look at this diagram, you would be able to understand the KPI. Key performance indicator structure, KPI, that is core metric measuring organization structure, then objectives and goals, specific targets for achievement, and it has a direct outlining with the KRAs, that is general goals outlining direction. So this is what is KPI all about. right? With this, we finish the chapter, and in the next chapter, we'll be looking at goal congruence, that is 10.5, and we would be completing module 10. Thank you for joining and keep learning, and I'll see you soon. Bye bye.